Headlines are celebrating America's trade deficit plunge like we just won the economic lottery. Bloomberg, CNBC, Wall Street Journal, they're all spinning this 56% drop like it's proof the economy is healing. But here's the brutal truth nobody's telling you. We didn't get richer, we didn't get stronger, and we sure as hell didn't win anything. We just bought less stuff because we can't afford it anymore. The financial media wants you to think shrinking trade deficits equal economic victory. That's not just wrong, it's dangerous. And if you believe that lie, you're about to get financially steamrolled. If you're tired of the fake financial hype and want real clarity about money, mindset, and how to build lasting wealth in a world full of economic deception, you're in the right place. This is Luxona, where millionaires are made, not misled. We blend financial truth, anti-guru insights, and the kind of clarity that cuts through the noise. Hit that subscribe button right now, because we drop financial truth bombs every single week that the mainstream media won't touch. Today, we're exposing why America's shrinking U.S. trade deficit 2025 numbers are actually a red flag for your wealth, not a green light. Let's break down the April 2025 data that has everyone celebrating. The U.S. trade deficit dropped 56%. Sounds incredible, right? But when you peel back the layers, here's what actually happened. Imports crashed. We're talking about a massive reduction in goods flowing into America. Meanwhile, exports barely budged. They rose slightly, but nothing spectacular. So this victory isn't because we became export powerhouses or manufacturing giants. We just stopped buying as much foreign stuff. Now, GDP and trade balance explained simply, when imports fall and exports stay flat, it technically improves your trade balance on paper. Economists love this because it makes GDP calculations look prettier. But here's what they're not telling you. This could signal economic weakness, not strength. Think about it logically. When does a household stop buying things they normally buy? When they're broke. When they're worried about the future. When they can't afford it anymore. The same logic applies to entire nations. This import drop isn't a sign of American economic independence. It's a symptom of declining purchasing power and economic uncertainty. Here's where the mainstream narrative completely falls apart. They want you to believe that buying less foreign goods automatically makes America stronger. But that's not how the real cause of trade deficit works. Lower imports often signal weakened domestic demand. When Americans can't afford to buy as much, whether it's electronics from China, cars from Germany, or machinery from Japan, imports naturally fall. But this isn't economic strength, it's economic contraction disguised as progress. The media won't tell you this, but much of this import reduction comes from inflation-squeezed consumers, supply chain disruptions, and the hidden effects of tariffs. When how tariffs affect consumers kicks in, everyday Americans pay more for everything, so they buy less of everything. That's not victory. That's financial pain, dressed up as policy success. And here's the kicker. While we're celebrating reduced imports, we're not addressing the fundamental structural problems that create trade imbalances in the first place. We're treating symptoms while ignoring the disease. Now let's talk about the elephant in the room. The real reason why America imports so much, and why this trade deficit improvement is actually masking a much deeper problem. America doesn't save money, period. And I'm not just talking about individual Americans, though that's certainly part of it. I'm talking about our collective national savings rate, which is pathetically low compared to countries that run trade surpluses. Here's how this works. When a country doesn't save enough domestically, it has to borrow money from foreign sources to fund its consumption and investment. This creates an inflow of foreign capital, which then gets spent on, you guessed it, more imports. It's a vicious cycle that most economists conveniently ignore. Countries like Germany, Japan, and South Korea run trade surpluses because they save more than they consume. They produce more than they buy, so they export the excess. America does the opposite. We consume more than we produce, so we import the difference. This isn't about manufacturing jobs or trade policies, it's about financial discipline. Or in America's case, the complete lack of it. When Americans save less than 3% of their income, while Germans save over 10%, guess which country needs to import capital to fund their lifestyle? When we collectively spend more than we earn, we create the exact conditions that require massive trade deficits. The connection between personal finance habits and national economic outcomes is crystal clear, but nobody wants to have that uncomfortable conversation. But it gets worse. The trade deficit versus fiscal deficit connection reveals an even uglier truth about America's financial dysfunction. Government spending creates fiscal deficits, which reduce national savings even further. When Washington spends trillions more than it collects in taxes, that money has to come from somewhere. And where does it come from? Foreign lenders. So we borrow money from China to fund government programs, then use that borrowed money to buy more stuff from China. It's economic insanity masquerading as fiscal policy. Every dollar the government borrows is a dollar that reduces America's collective savings. Every fiscal deficit makes the trade deficit worse by creating more demand for foreign capital. The two deficits feed each other in a destructive spiral that neither political party wants to acknowledge. Here's the irony that should make your blood boil. More government debt equals more personal financial pain for ordinary citizens. The government borrows money internationally, which weakens the dollar, which makes imports more expensive, which drives up your cost of living. You're literally paying twice. Once, through future taxes to service the debt, and again through higher prices at the store. Meanwhile, politicians celebrate deficit reduction. That's really just economic contraction in disguise. So why should you care about trade deficit numbers when you're trying to build personal wealth? Because these macro trends directly impact your financial future in ways most people never realize. When trade deficits shrink due to economic weakness rather than economic strength, it signals rising costs, shrinking choices, and artificially inflated markets. The stock market might celebrate reduced imports as GDP growth, but that growth is fake if it's built on people buying less stuff because they can't afford it. This creates a dangerous illusion that misleads investors and destroys middle-class wealth. People see improving trade numbers, assume the economy is strong, and make investment decisions based on false data. Meanwhile, the real economy, where actual people buy actual things with actual money, is contracting. If you're building wealth the right way, debt-free, savings first, long-term investing, this macro environment actually creates opportunities. While everyone else chases fake headlines and artificial metrics, you can position yourself to benefit from real economic fundamentals. The antidote to this madness isn't complex. Build wealth privately while the public narrative falls apart. Save money when everyone else borrows. Invest for the long term when everyone else chases quarterly headlines. Build real assets when everyone else celebrates fake metrics. Don't let improving trade deficit numbers fool you into thinking the underlying problems are solved. They're not. If anything, they're getting worse. And the people who understand this reality will be the ones who profit when the truth finally comes to light. The Financial Truth YouTube channels won't tell you this, but shrinking trade deficits in a low savings, high debt economy are a warning sign, not a victory lap. Position your wealth accordingly. If you're ready to stop being lied to by financial headlines and start building real wealth based on actual economic reality, not media hype, hit that subscribe button right now. Join Luxona, where we expose the financial truth, decode the money matrix, and help you build wealth without debt, while everyone else chases fake metrics and empty promises. We don't just talk about money, we show you how to build wealth without debt using timeless principles that work, regardless of what the headlines say. And if you want deeper dives, exclusive wealth-building guides, and content too real for YouTube's algorithm, join us on Patreon. The link is in the description below. That's where we share the strategies and insights that turn financial clarity into actual millionaire results. Remember, where millionaires are made, not misled. See you in the next video.